Welcome to the Deep Dive. Today, we're tackling a really interesting question, one I think a lot of you might have wondered about. Can you actually take just $100 and, well, turn it into $1,000 through investing?
Seems like a big jump, doesn't it?
It really does. And you often hear you need, you know, serious cash just to get in the game, but the source material we looked at offers a different take.
Exactly. We've been going through these excerpts from scriptsubtune.pdf, and honestly, it paints a picture that's much more accessible than you might think for growing a small investment.
Okay.
The idea is basically if you use the right strategies and, crucially, have some patience, even starting small can potentially lead to real growth.
So our mission for this deep dive is pretty clear then. Let's pull out those practical steps, the actionable stuff. For anyone listening who's got maybe a spare $100 and is thinking, could this actually become something more?
Let's find out.
Okay, so where do we start? The source kicks things off with mindset, which I found interesting. It's not about striking it rich overnight, is it?
No, not at all. That's a key point. The source really pushes for a shift away from that get-rich-quick mentality towards something more like steady growth. It positions smart investing as, a process of making calculated decisions, definitely not gambling.
So it sets realistic expectations from the get-go. Patience is key.
Patience, and the source also highlights consistency and time. Those are the big ones.
It feels less daunting that way somehow. Less about secret tricks, more about just, well, sticking with it. All right, mindset adjusted. What's next? People often stumble on just where to actually do this investing, right? The platform matters.
Hugely, especially with a small amount, like $100. The source strongly recommends looking at commission-free platforms.
Why is that so crucial?
Well, if you've only got $100, you don't want $5 or $10 immediately taken out just for making a trade. Commission-free means your whole $100 can start working for you.
Makes sense. Does the source name any specific ones?
Yeah, it lists a few popular ones: Robinhood, Wibble, SoFi, Public. It also mentions Acorns, highlighting it as potentially good for absolute beginners.
Okay, good options to check out. And these platforms often have another feature that's vital for small investors. Fractional shares.
Yes, fractional investing, it's a real game changer.
Can you break that down? How does it help someone with just $100?
Sure. So think about a big company, maybe Apple or Amazon. One share might cost, I don't know, hundreds of dollars, right?
Way more than our $100 budget.
Exactly. But with fractional investing, you don't need to buy a whole share. You can just buy, say, $100 worth of that stock. You own a piece, a fraction of one share.
Ah, okay. So you can still invest in those major companies even without huge capital.
Precisely. It opens the door. It means you can start building a portfolio with companies you believe in, even with just that initial $100. It really levels the playing field.
That's huge.
Yeah.
Okay, mindset, check. Platform.check. Now, the big one, strategy. Where does that $100 actually go? The source lays out 3 paths, depending on your comfort with risk. Let's start with the stock market, the buy and hold idea.
Right. This is probably the most traditional approach mentioned. It's about investing in companies that seem fundamentally strong, companies with good potential for growth over the long haul.
Like household names.
Often, yeah. The source uses examples like Apple, Amazon, Tesla, big established companies. It also suggests looking into ETFs, exchange-traded funds.
Like VOO or SPY.
Exactly. Those track the S&P 500. So instead of picking one company, you're essentially buying a tiny piece of the 500 largest U.S. companies. It's instant diversification in a way.
And the expectation here is more stability, maybe slower growth. What kind of return does the source suggest is realistic?
It mentions a range of around 10 to 15% annual return based on historical averages. But, that's an average over time.
Right, not a guarantee each year. And for just $100, that first year's return might seem small.
It might, yeah. $10 or $15 doesn't sound like much. But the source emphasizes consistency and the long view. It gives this illustration that $100, if it grew at, say, 20% a year, which is optimistic, mind you, but just for illustration, it could potentially reach $1,000 in about 12 years.
12 years. Okay, that really frames the steady growth idea. It's not instant. It connects to bigger goals, maybe retirement, that kind of time frame.
Exactly. It's foundational. Now, shifting gears completely, the source also talks about cryptocurrency.
Ah, the other end of the spectrum. High risk, high reward.
That's precisely how it's framed. It mentions assets like Bitcoin and Ethereum, which, as we know, have seen, well, massive growth at times.
So the potential for that $100 to multiply faster is there.
The potential is definitely acknowledged, yeah.
But I'm guessing there's a big but coming.
A very big but. The source is really clear on this. If you're considering crypto, you must do your homework. Thorough research, understand the risks.
And risk management.
Absolutely. And the most critical warning, only put in money you can genuinely afford to lose. Because it's volatile, it can go down just as fast as it goes up.
Okay. Crucial advice. Don't bet the rent money.
Definitely not.
All right, so we have buy and hold stocks, ETFs, and high-risk crypto. What's the third strategy?
The third category is sort of alternative investments accessible through certain platforms. Think peer-to-peer lending or micro-investing apps.
Examples?
The source mentions Fundrise, which lets you invest in real estate projects with small amounts, and Lending Club for peer-to-peer loans, basically. You're lending money to others.
Interesting. How does the growth potential compare here?
Likely slower growth compared to maybe a hot stock or crypto bull run, but the benefit highlighted is diversification.
Spreading the risk.
Exactly. Even with just $100, putting some here, some there, maybe stocks, maybe a bit in one of these, it means you're not entirely exposed if one specific area takes a hit. Plus, they can sometimes offer passive income streams.
Got it. So different paths depending on your risk appetite and goals.
Yeah.
But regardless of which path you choose, there's something fundamental the source stresses for actually growing the money, right? Reinvesting.
Yes. This is where compounding comes in. It's like the magic ingredient.
Explain that magic.
It's simple, really. Any money your investment earns could be a dividend from a stock, interest from a P2P loan, maybe some profit from crypto. You don't take it out. You put it straight back in.
So your earnings start earning their own money.
Precisely. The source suggests setting up automatic reinvestment if your platform allows it. It just makes it seamless. It's like that snowball analogy, right?
Rolling downhill.
Yeah. It starts small, picks up more snow, gets bigger, and then because it's bigger, it picks up snow even faster. That's compounding with your money.
Great visual. Okay, and compounding works even better if you're also adding new money, even small amounts.
Absolutely. The source really encourages this. Even if it's just, say, $10 a week or $20 a month, whatever you can manage consistently.
It doesn't sound like much, but it adds up.
It builds momentum. Each little bit you add shortens the time it takes to reach that $1,000 goal or whatever your next target is. It reinforces that investing habit.
Makes sense. It's not just the initial $100, it's the ongoing effort. Now, alongside putting money in, the source talks about putting knowledge in your head, continuous learning.
Yeah, it calls knowledge itself a valuable investment, which is true, right?
Totally.
It suggests things like checking out finance YouTube channels, listening to podcasts like this one.
Indeed.
And it specifically names some classic books, The Intelligent Investor by Benjamin Graham.
The Value Investing Bible.
Right. Rich Dad, Poor Dad by Kiyosaki and Tony Robbins' Unshakable. The point is, the more you learn, the better you get at spotting opportunities and maybe more importantly, avoiding mistakes.
Which is a perfect segue. The source also flags common pitfalls for beginners. What should people watch out for?
Several things. One is FOMO, investing, fear of missing out.
Chasing hype.
Exactly. Jumping on something just because everyone's talking about it without really understanding it. Big risk. Another is trying to day trade without any experience. That's usually a quick way to lose money for newcomers.
Seems stressful too.
Very. Then there's the opposite of diversification, putting all your eggs in one basket. If that one thing tanks, you're wiped out.
Right.
And finally, something we touched on earlier, fees. Even on commission-free platforms, there might be other small fees for certain things. Always read the fine print, because those little costs can add up and slow down your growth.
Good point about checking the details, even with commission-free. Okay, lots of practical advice there. So if we boil it all down, what's the main takeaway from our deep dive today?
I think the core message is genuinely optimistic. It's that, yes, turning $100 into $1,000 through investing is possible. It's not necessarily fast or easy.
No, get rich quick.
No, get rich quick. It takes that consistency we talked about, making smart choices based on some research and having that long-term growth mindset, but it is achievable.
And it feels like the process itself is almost as valuable as hitting the $1,000 number. You're building financial habits.
Exactly that. The source sort of reframes it. It's not just about hitting a specific target. It's about developing the skills and discipline for long-term financial well-being. That's the real prize, maybe.
Well said. So for everyone listening, maybe the final thought is this. The source shows starting small is powerful, staying consistent is key, and thinking bigger is possible. So take a second and maybe reflect. what does thinking big about financial freedom actually look like for you beyond just that first $1,000? What could that journey unlock? It all starts with taking that first step.